0, 1. Let's get started.
Why they stopping me?
What's up? It's your girl, Dr. Nicole, standing on business here today. I hope that you are sharing this particular channel with somebody else so that they can break free from financial trauma too. I'm trying to tell you something good. I'm trying to tell you something legit. I'm trying to tell you something that the experts know that others may not know. Series 76365, Life and Health, 25 years CFP practitioner in this industry for over 30 years. Yeah, this is the place you come for the accurate information when you want to stand on business. Now, I said we're going to start where we're standing. The last time we were together, I told you about what? I told you about the health insurance. Can we carry on to the life insurance? This is so we can lay a firm financial foundation. You want to look next at the life insurance. What is your company offering you? Many companies, when you work for them full-time, they may offer you 1, 2, perhaps even 3 times your salary. Take a look at what the benefits offer you and then consider purchasing additional insurance. It is literally pennies on the dollar for anyone that needs additional coverage. Sometimes they even allow you to cover for your spouse as well. And so one of the things that I talk about when we're discussing insurance on the job is to recognize this, that insurance, unless your company offers it, is not portable. That means you can't take the insurance with you. So as an example, I liken it to car insurance. You hope to never need it, but you want it to be there just in case you ever get into a situation. I'm going to pause here for a moment and just share this with you as well. Many individuals get these offers from their banks saying, hey, sign up for $50,000, sign up for $100,000 worth of insurance. This is not on your job. This might be through your banking institution, but you're not reading it very carefully. It says sign up for accidental death and dismemberment. It says AD&D. Let me explain what that is. It means exactly what I said. Accidental death and dismemberment. That means you can't just die naturally and receive the insurance. You have to have an accident. So that type of use of your resources may not be the most optimal resource, or the most optimal place where you would want to put your resources. It's not going to really benefit you unless you get into an accident. So let's just be very careful about where it is we're spending our dollars, because $5, $10, $15 per week, per month, it begins to add up over time. And so we want to look at these little ways that we can manage our money better. So back to what it is that I was saying. They may offer you 1, 2, or 3 times your salary. They may offer you the opportunity to have some level of coverage for your spouse as well. You want to take full advantage of it, especially given your personal circumstances. Now, I am one of those advisors that believe your insurance needs will decline over time, but I also believe your long-term care needs will increase over time. And so having insurance on the job is not sufficient. It is a good way to get started. It is a good way to lay a firm foundation, but you're eventually going to need some level of permanent insurance. That's not for today's lesson. I just want to help you out in this moment. How do I decide how much insurance that I need? Well, what are your obligations? That's how we determine. Insurance is based off of if I were to die today. I know. Here's the newsflash. Everyone's going to die. I know. You may not know what day, but everyone is going to die. So having these conversations are important. Purchasing life insurance is based off of if I were to die today. And so if you were to die today, what level of obligations do you have? What income are you replacing? What is your contribution to your household? What would you desire for your children if you have children? Do you have a mortgage that you want to make sure is covered or paid in full? What are your obligations? This is the best way to determine how much insurance someone needs. What is your commitment to the other parties? If you do have children and they're young, how do you want them, to be cared for? What level of protection do you want for them? All of these are considerations when you're purchasing insurance. I want to give you one other note that I think is important when you start talking about insurance through your job, and that is who you're selecting as a beneficiary. So when we start thinking about insurance, you have to identify your beneficiaries in the moment. You have to determine who you're going to leave that money to. Here's a word of caution, or at least something you should consider. It is very, how can I best say it? It's not the most excellent way or use of dollars to put a minor child as a beneficiary without having consultation with someone that may be a professional and know what your level of circumstances or considerations are. One of the biggest mistakes individuals make is that they may put money in a child's name and the child will not have access to it until they hit age of majority. So if you're purchasing the insurance to care for them now, then you may want to reconsider how that looks. And so I don't want to give you any suggestions. If you ask very specific questions, I'll answer them, because everyone doesn't have the same circumstances. And because I am a CFP practitioner, I believe in individualization and customization. So in that regard, I'm giving you what is broadly to be understood. It is critical that you look at your situation and determine, what do I want to provide for? But I will almost always say, leaving resources to a minority child is probably not the most excellent use of resources. So I will see you back. That's part one. This is part two of what do we do when we're standing on business and we're starting where we're standing. Because all of us, while we're minding our business, we are going to break free from financial trauma. See you at part three.
0, 1.